Hello and welcome to another episode of the Uranium Market Minute. Today is Monday, February 28th, and this is episode number 84. Thank you so much for tuning in. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Before we get into it, as always, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. All right, happy to be here again with you all. Another very, very exciting day in the uranium world. Things continue to escalate. Tension continues to escalate in the Ukraine with Russia invading, and my sincere prayers go out to everyone potentially involved and impacted by this situation. It's not looking pretty, and it doesn't look like it's going to resolve, quote unquote, in a matter of days, as many were pontificating. It's looking like this situation is just getting more messy by the day, and Russia is facing all sorts of financial implications and sanctions, having SWIFT cut off from a number of its banks. The ruble is getting crushed. The Russian stock market was halted. I mean, it's a total mess out there, and certain markets are reacting. The oil market's reacting. The uranium market is reacting, of course, but there's a number of implications with what's going on with this situation that I'd like to talk about in the mailbag section, particularly in terms of a pinch in the supply of enrichment and what that could mean for all the other elements of the fuel cycle. So I'll get into that in the mailbag section. And for now, let's just run through the daily scoreboard, look at some charts. There's an interesting chart pattern I want to highlight that I think is curious. But for now, let's dive right into the daily scoreboard. So the spot price of uranium up over $2 today, 48.37 a pound. This is a really big move over the past few days for the spot price of uranium. And I think that this has some legs. We could continue to see more pressure come into the spot market in terms of price appreciation. And there's a number of elements that might keep some liquidity out of the spot market that we had previously seen in terms of midterm supply availability for carry traders to cover their selling into the spot market. So I talked about that a bit on Friday. If you want more details on that potential development for the spot market, go back to episode number 83 that I recorded on Friday before the weekend. But yeah, either way, tightness in the spot market, we're seeing some pretty significant moves in the price. So on Friday, Sprott raised 82.9 million in new capital through their ATM, the highest volume day on record for the Sprott Physical Uranium Trust. They purchased an astonishing 1.4 million pounds of uranium on Friday. I believe they're back in the market buying today, and they definitely were back in the market issuing more shares. I don't think they raised quite as much as they did on Friday. We're seeing smaller volumes on Friday, but most of today's trading, they were greater than that 1% premium to NAV. So they probably raised, 20, 30 plus million today, which is obviously significant. So those numbers are just huge from Sprott. Year to date, 6.2 million pounds and 351.4 million in capital raised by the Sprott Physical Uranium Trust in the first 2 months of 2022. Absolutely incredible. On Friday, they closed at a large premium to NAV of 4.82%. And the trust traded up and down a little bit. I think it closed pretty close to being flat. We'll look at the charts in just a second. But either way, they were at a premium to NAV greater than 1% for most of the day, despite the big move in the spot price. So they likely raised a decent chunk of money again today. As of today's open, they were sitting on 90.7 million in cash, which is about 60 million available to purchase new uranium, or over another million pounds from the spot market at current prices. They now sit on 47.4 million total pounds of U3O8 and have raised over $1.25 billion since August of last year. The NAV is now over 2.3 billion. Remember, that is now almost 4x of the NAV of UPC when they took that over, Uranium Participation Corporation, in July of last year. Just unbelievable numbers coming from Sprott. Turning to the ETFs, URA did not report any change in outstanding shares. However, URM did a pretty chunky issue, 250,000 new shares on Friday. That gave rise to 17.2 million in new mandated buying. And of course, combined, we are seeing yet another all-time high in outstanding shares for the ETFs. Since the beginning of the year, URA has increased by 5.6 million shares, URNM just over 1 million shares. Combined, that's 174.9 million in mandated buying from the ETF. So again, money continues to flow into the ETFs. And as we were seeing when the market action here, that tell that we highlighted in January when the markets were bleeding out, that tell of the ETFs outstanding shares rising was something that we took note of, and hopefully you did as well. And that informed us to have more confidence, I guess, at least in the short term, in terms of the market action that we were seeing, that money was coming into the ETFs despite the actual stocks themselves selling off. So to us, that meant something noteworthy, especially in terms of potential for institutional money to continue to position in the ETFs, which it appears as it did. And now we're seeing the result of that, or at least some result of that, was strong positioning. Once all the sellers are wiped out, it doesn't take much for the movements of the uranium space to reverse sharply. And that's exactly what we're seeing here. On that note, why don't we take a look at the charts? Starting off with URA, I wanted to highlight an interesting pattern here. This is not a pattern that I necessarily trade off of or have historically. Most of the time when I trade technically, I like to go based on volume, based on moving averages and consolidation breakouts. Those are my favorite patterns to trade. Of course, this is a fundamental investment. So we use the charts to look at areas of accumulation, to look at areas of support for when the selling is substantial in order to add to our positions for a mid to long-term hold in a fundamental investment, in which we are in now currently with uranium. But I thought this was curious. I've seen a number of people post this, this Jesse Livermore accumulation cylinder chart is what he calls this. I've seen a number of people post this over the past month and a half or so. Somebody actually reached out to me in a direct message asking about this directly. And I was like, kind of reminded me to look at it again. And it is very interesting. So Jesse Livermore is a classic investing figure, one of the best traders really in history. And he was in the early 20th century. At one point, he was one of the wealthiest people in the world. And he has this pattern here he calls the accumulation cylinder. Now I'll show you a sketch of essentially his accumulation cylinder. So this widening mouth, kind of this megaphone pattern. What is this really besides a couple of lines on a chart? What does this really mean when a chart acts in this manner? So if you look from point A to point G, what essentially is happening is a series of higher highs and higher lows. And I think the most important part of a pattern like this is the higher low. And what does that mean? That means that there is accumulation happening. That means the selling pressure only lasts so long before the buyers step in and take over again. And this has been happening in a number of stocks across the space, URA included. So now we have a series of 4 higher lows in a row. 1, 2, 3, 4, 5, 6, 7. If we look at point number 7 on this chart that's sketched out, that is the point at which oftentimes the accumulated stock, or in this case, ETF or sector as a whole, can potentially make some very, very large moves to the upside. Now, of course, we would be looking for this to play out with a breakthrough of this upper part of that cylinder. So I just thought that was really interesting. But either way, looking at this chart a little bit more closely, as we typically do, we're seeing really big volume, nice increase in volume on the way up, which is, of course, is what we like to see. We like to see decreasing volume on the way down, increasing volume on the way up. It's exactly what we're seeing here. MACD is now in positive territory. RSI is running. Very good to see. Today, URA closed basically at the highs on the day, up over 6%. Now, keep in mind, this is with the SPOOs, with the QQQs, with the Dow all flat or slightly down on the day. Now, they did trade up and down throughout the day, but either way, a relatively weak tape for the broad markets and an absolute standout day for uranium again, after a huge day on Friday. In fact, we have 3 really solid green candles in a row. That is a very, very good sign. Looking at the Sprott Physical Uranium Trust, another big volume day, obviously not as much as we saw on Friday, which was a record volume, but very respectable volume coming into this today. It did trade down 1.45%, likely having to do with shares being issued through the ATM. So we'll have to see how much they raised. Like I mentioned, I think they easily raised 20 to 30 million. In fact, it could be substantially more than that. We'll have to see when they report in a couple of hours. Either way, breakout confirmed, volume, just a beautiful, beautiful chart here. And of course, this is moving in line with the spot price of uranium. I want to show you Cameco as well, because this one is quite the looker. Closed almost at the highs on the day, up almost 8%, big volume, just an absolutely beautiful chart. And I want to note something. This is something I really like to see in a bullish chart, is when the moving averages here get really squished together, when they really get squished together and they're all moving up. Okay. So when we have the moving averages get concentrated, stacked on top of each other, the 20-day, the 50-day, the 200-day, and we see a high volume breakout, this is a beautiful, beautiful thing. And if you look out in the past at a similar situation, what did we see here? We saw the moving averages sandwiched together. However, they were all moving up with the exception of that 50-day, right? The 50-day did eventually move up a couple days after the breakout, but they were all crunched together. And then we saw a high volume breakout. And of course, that led to multiple months of outstanding performance for Cameco. This chart also is likely getting some love due to Cameco being a producer in the West, although a good chunk of their production still currently is that JV, the Inkai JV with Kazatomprom. Either way, Cameco getting some love, probably due to just the risk that we're seeing being applied to the Eastern suppliers, primarily Russia. The chart for Kazatomprom is also very curious. Kazatomprom is not participating in this rally. Now, it's not selling off like the Russian stocks here, but it certainly is not taking part in the uranium rally here. So the market appears to be attributing some level of risk to Kazatomprom, not only just having their, sharing the border with Russia. The recent skirmish in Kazakhstan last month had Russian and Belarusian troops come to the rescue to quell that unrest. So there clearly is, some coordination on some part between Kazakhstan and Russia. However, it does appear that Kazakhstan is not acting in support of Russia and their invasion of Ukraine. So that's obviously good to see. Kazakhstan, or Kazatomprom, does have joint ventures with Uranium One. So be curious to see how this plays out in terms of Kazakhstani supply. Either way, clearly the market is pricing in some expectations that this situation has some legs and it could stick for a while in terms of disruption to the overall uranium market due to what's happening in Russia, due to the financial implications of dealing with Russia in any way, shape, or form currently. Now, how long will this last? Nobody really knows. I think that there's a lot of damage already done here, honestly. I don't think that there's going to be peace, like a peace treaty signed in the next few days or even a week or two. And then all of a sudden we go back to how things were 2 or 3 weeks ago. I just have a feeling that's not going to happen. I think that there's some risk that's being placed on Russian uranium that is unlikely to go away in the short term. Now, will that go away in the long term? Probably. Will that go away in the midterm? I really don't know. It really just depends on how things play out here. As I've mentioned before, Russia is a huge, huge player in the uranium space. Absolutely huge. Okay, they have a massive export book in terms of nuclear reactors being contracted and built in other countries. Okay, they're just absolutely huge. Rosatom. Uranium One has been a big player in the uranium space in both U3O8 and then all the way up the fuel cycle. Then you have 10X and TVEL, which are providers of multiple elements of the fuel cycle, especially enriched uranium. Those are Russian entities. And all of these Russian corporations are essentially partially or entirely state-owned. So I think that what we're seeing here is, and of course, so Russia provides over 40% of global enrichment. That's their biggest piece, contribution, let's say, to the fuel cycle is enrichment. And to have that cut off, even in the short term, has a number of implications. And one of those implications I want to talk about really in this mailbag section here, because I did have some questions come into me about underfeeding versus overfeeding. And underfeeding is a term that most people in the space at least have a loose understanding of. And so I'm going to explain that a little bit better. Hopefully I can translate into layman's terms here what that means. and then what overfeeding means, which essentially is the opposite, but there's a little bit of nuance there. Art Hyde from Segra Capital on Twitter. If you are on Twitter and aren't following him, you really should. He doesn't post that frequently, but when he does, it's usually something worth noting. He mentioned the implications on the U3O8 market in terms of overfeeding. And of course the UF6 market, because UF6, uranium hexafluoride, is the feed into the enrichment centrifuges. So when an enricher contracts with a utility to provide enriched uranium, they agree upon a certain tails assay. So the tails are basically the waste product coming from the enrichment process. And the tails will have a certain percentage based on the extent to which the feed material is spun in the centrifuge. So UF6, or natural uranium, is 0.7% U-235, which is a fissile isotope. That needs to be enriched up to around 3 to 5%. 3.5% is pretty average in terms of the enrichment level of U-235 in nuclear fuel rods. Okay, so the enricher will contract with the utility with a certain tails assay, and that determines how much the material will be spun and also how much feed material will need to be provided to the enricher. The feed is provided by the utility that's contracting for the enriched uranium. So if they say we'll go to a tails assay of 0.2%, whatever it might be, that will dictate how much feed is needed to be spun at that level, at that tails assay level, and result in the amount of EUP, enriched uranium product, that the utility is contracting for. Okay, so what happens is when an enricher has excess capacity, so let's say there's not a lot of demand for enrichment, and they have the ability to spin those centrifuges for a longer period of time. Okay, they have excess capacity to produce enriched uranium. What they'll do is they'll make that contract with the utility, and then they will actually spin that material down to a lower tails assay, which means they need less feed to get to the desired amount of EUP for that particular contract. Less feed, they underfeed the centrifuge and spin it down to a lower tails assay. That excess UF6 that they have, because they didn't feed quite as much into the centrifuge, they then have to sell into the spot market or to use in future production of EUP, right? But it's excess material, it's secondary supply, it's underfeeding. Now, there also is another piece of secondary supply from enrichers called tails re-enrichment that often just gets lumped into the term underfeeding, although it's not underfeeding. It's basically also comes from excess capacity. Is they'll actually take that tails material that's sitting at that 0.18, 0.2, whatever percentage it might be, tails assay, and they'll take those tails and they'll spin them again. They'll just squeeze a little bit more of EUP out of those tails, and that adds to some secondary supply as well. Now, when excess capacity is diminished, that underfeeding is drastically reduced, and that tails re-enrichment is drastically reduced, and we've been seeing that happening. The secondary supply coming from enrichment has been dwindling over the last couple of years, which is a positive sign in terms of stabilizing the nuclear fuel market. More importantly, stabilizing the prices. Now, if we have an entity that's providing 40+% of global enrichment services, okay, so that's SWU. They sell SWU, separative work unit. That's the pricing that dictates the cost of enrichment. So Russia provides a massive amount of SWU. Now, let's say Western utilities all of a sudden can no longer access that Russian enriched material, okay? And we're not saying that's exactly the case currently, but that is looking like that's a potential outcome here. Have they officially been sanctioned? No. Are there financial sanctions happening? Yes. There are banks being cut off from the SWIFT system. There's likely capital risk here. So if you're a utility and you are going to be borrowing money in order to run material through the fuel cycle, it's likely that capital is not going to take on the risk of dealing with a Russian entity at this time, okay? So what we're talking about is somewhat hypothetical, but we believe that we're beginning to see the start of this play out. So if you are a Western enricher, that all of a sudden you need to step up the amount that you're producing, what you will essentially have to do is overfeed centrifuges in order to result in the amount of EUP needed for whatever particular contract you're providing for. Because you have reduced capacity, you have massive demand coming in, and you'll have to get that material in and out faster. Okay, so if you have a set tails assay by a contract, and you need to overfeed in order to get that material spun from natural uranium to enriched uranium faster than what you had contracted for, you will be spinning to a higher tails assay, and you will need to add more UF6 into that centrifuge than was previously contracted for. Okay, so basically what that means is that overfeeding will do one of two things. It will essentially eliminate underfeeding coming from Western enrichers. Now, you might see excess capacity from Eastern enrichers, from Russian enrichers at this point, and underfeeding from Russia. But if that material isn't going to be going west, that's likely going to be staying in the east. And it's just too early to speculate on what that looks like, right? But it probably looks like more uranium for China. I mean, that's a pretty basic assumption off the top of my head. But essentially, the results of this are multifold. One, underfeeding is reduced in Western enrichers. Okay, that's one piece. A second piece would be that overfeeding requires more UF6. And UF6 has been at a relatively high price. Conversion and UF6 have been at very high prices ever since ConverDyn shut down their Metropolis plant in the States. That is set to come back online next year, but it is not online as of yet. So there is going to be potentially a big pinch for UF6, considering ConverDyn is still down. Okay, but the UF6, obviously, all of the elements of the fuel cycle have knock-on effects for the previous layer of that fuel cycle. So if you see massive new demand for Western enrichment, you're going to see overfeeding. You're going to see a big new demand for UF6, and you'll see a big new demand for U3O8, which is the first stage of that entire cycle. So this is what I think that we're starting to see in terms of the movement in the spot price. And these are just some speculations on what we could see happen if we continue to see this risk applied to Russian uranium products. Okay, so that's just this is one thing that we could be seeing. And honestly, in my opinion, this situation doesn't look like it's going to resolve itself quickly. And like I said, I don't think that this reverses course and it goes back to quote unquote normal anytime in the short term. Now, of course, as I mentioned last week, this is not a situation that we are celebrating. This is not something that we are trading around. This was not something we were betting on. I tweeted out today that if this risk stays applied to these Russian uranium products for a longer period of time, then this is essentially a black swan event. This is an unexpected event that has implications for the market. Now, of course, this quote unquote black swan event is a negative thing for the Russian stock markets. It's potentially a negative thing for stock markets in general. It is clearly a positive thing for the price of uranium, and that's what our uranium investments tend to track. So another really wild day, just huge numbers in terms of returns. I mean, some of these uranium stocks are up 10 to 15% in a single day. And this is like, you have to be a contrarian in this sector. You have to be a buyer when things are bloody if you believe in the long term. I tried to pound the table on this in January as much as I could without people getting frustrating for me for being an uber bull when everything was selling off. But we sent out an email bulletin to our members on January 24th called Uranium Sector Gut Check Part 2. Why Part 2? Because we sent one out back in August of last year and there was multiple months of selling. And that bulletin we sent out, that was the low print of this previous sell-off cycle. And of course, what was held in that bulletin, it was, hang on, guys. This has never looked better fundamentally. If you're still adding to your positions and tranches, add a tranche now. Time to get aggressive, time to get greedy. And I'm so happy to see that has paid off yet again. So, this is one of those trades where the fundamentals are just so unbelievably positive. And if your conviction is high for the mid to long term, then the short-term pain in the markets is something that if you're fully positioned, you just need to ignore. And if you're still adding, you need to get aggressive. That's just how these markets work. And it will never, ever be another way. That's just how it is. So as much as I'd like to say that things will always look rosy in terms of our investments. Clearly, that's not the case. We just went through a multi-month downturn in uranium. We've still got another 15, 20, 25% to go, if not more, to get back to those November highs. So we're clearly not out of the woods here, but this is, a few days into what looks to be a rally that could last a while, especially if some of the implications I just mentioned regarding Russian uranium supply do end up panning out in that way. And it's entirely possible that they do. Like I said, we're not betting on it. We're not betting around it. We have our fundamental investments for the reasons I've discussed ad nauseum over the previous 83 episodes of this podcast. And if you remember, obviously, we pound the table on the fundamentals. At the beginning of every letter, we have usually about 10 to 15 pages of macro where we talk about what we're seeing in the markets. By the way, members, your March letter will be out on Wednesday. That'll be the 2nd of March. We always send those out on the second trading day of the month. And again, we're going to go deep into what we're seeing in the sector and touch on a number of these elements that I've mentioned now and what we feel we expect to see from the markets in reaction to this. So look out for that newsletter that should be out Wednesday morning before the market opens. If you're not a member and you are interested in getting a sample of our content, click the link in the description below, and we will send you a sample newsletter from a previous month. You'll get a better idea of the type of content that we put out. And of course, as always, if you've been enjoying this content, please like this video, subscribe to the channel, hit the notification bell. You will be reminded whenever we publish a new episode, which is almost every day. Thank you again for being here. Again, my prayers are sincerely with anyone who is being negatively impacted from this terrible situation in the Ukraine. It's just terrible. I don't know what else to say. And my prayers are with Ukrainian people and their families, and with the Russian people who are against this, who are not wanting this to happen. I feel for those people too, who are being potentially massively impacted in a financial manner by what's happened to the Russian markets. So just terrible. I'm pleased that our investments are working out. Of course, I'm pleased, but I don't like that's happening on this type of situation. So with all of that said, I hope that you are well, and I will see you all tomorrow. Cheers.